And Lexi, let me know when my audio is on. Excellent. It looks like we're up and running. So guys, welcome to the Friday night wealth creation course. I hope you're having a fantastic day today. I want to come at you with a really in-depth course on how to build wealth. Okay, and I know that this is a topic a lot of people talk about and cover, but I want to share with you because right now we have some stuff going on in the economy. We've got the market crashing. We have coronavirus garbage going on. We have all sorts of stuff going on. And so for the person that might be focused on like, hey, I still want to build wealth, it kind of looks difficult, right? Just lost half my 401k. I don't know if my house is going to stay in the same value, like all these questions and uncertainties. And so I really want to break this down. Now, to understand where I'm coming from, I'm going to show actually tonight a couple of different resources. To understand where I'm coming from on this, we've got to really get an idea of where we're at. Okay, so let me show you guys a few things I came up with that I want to go over here first. So this first one is called the scale of wealth. Okay, and basically I've got this up on Instagram and on Facebook here. This scale goes over exactly where a person is at today in relation to where they need to be at, right? So all like economic crisis stuff aside, all virus stuff aside, all politics aside, if I want to build wealth, I've got to know what that means, right? For me, the definition of wealth is right here. It's at the very top of the scale. Okay, passive income exceeds expenses, 40% savings, and taxes, right? So what that means is that I'm earning money without trading time. Okay, that's important. That's important. I'm earning money without trading time because my passive income exceeds my expenses, my 40% savings rate, and my taxes. So let's just take a pause there and think about that. That's called a target. I've got to get to that target. That target has nothing to do with coronavirus. That target has nothing to do with where the stock market's at. I can't get passive income from the stock market. Okay, that has nothing to do with whether or not my kids are in school right now. It's got nothing to do with whether or not there's enough toilet paper in the stores. My target is my target. How do I get there? Right now, that was my problem. Like, and this was like way before, like this was years ago. There was no economic crisis happening when I was having this problem. I was looking at, all right, I'm in like broke poverty land. Like at some point we were all in poverty, right? I was in that area and I was looking at, I want to build wealth. I want to be in that group that has the passive income, right? How do I get there? And it didn't seem real to me to think about, I'm gonna have passive income exceeding my expenses, my savings rate, and my taxes, because at the time I was like, how am I gonna pay my bills, right? I had like $1,000 in savings at the time, maybe that, right? And that's about where 60% or so of America is at today. So a lot of us can relate to, I don't have a lot of money saved. All my money, if I do have it saved, is probably wrapped up in my 401k or in the value of my house. Those things are probably dropping right now. What do I do? Right? And it's not helpful for me to say, well, go build wealth. Well, if I knew how to build wealth, I would do it, dingus. Like that's I would do the next step if I knew the next step. So some of the facts that we need to confront here is that every single one of us is somewhere on this chart, right? Regardless of the economy, I have my own personal economy. Did you know economy actually means the management of a household? The management of a household. So economy does not mean this big macro, like gigantic money thing with the entire country and politics. It's what's going on in my own house. What's going on in my own household with my own money right now? Because that has nothing to do with the stock market. That has nothing to do with what Trump says. That has nothing to do with the fact that people can't fly from Europe to the US starting Monday. Like none of that stuff helps me and none of that stuff harms me. I have clients right now making moves on investments. I have a client today, she just dropped 100 grand into an investment deal, money that we pulled out of her home that she didn't even know she had. And she's not feeling a pinch. She's not feeling a recession. She's not feeling a market crash. She's focused on her target. She knows her target, right? So check this out. I have to realize I'm somewhere on the chart. If I don't confront that, then I can't make progress. And I have to realize that where I'm at on the chart, that's my real economic condition. not the condition of the country. The condition of the country isn't me. Most people don't actually even know what a recession is. Okay, if the average person had to define recession, they would not be able to. For a while, I didn't know what it was. Okay, and then I learned a recession is a decline in the gross domestic product in a country for 3 consecutive months, a quarter. Right? What is gross domestic product? That's all of the sales of all of the industries that are tracked in the United States of America. Sales dropped for 3 months in a row. Okay, why would that affect me? It doesn't, like, I'm not in that group. It means, like, big picture, like, large companies might have, but I didn't. Okay, what about a depression? We hear this word thrown around. We're going into a depression. We're on the verge of a depression. Gross domestic product declines for 2 quarters in a row, for 6 consecutive months. That's a depression. Again, I don't have to be in that group, because I have to look at where am I at? Where am I at? And if I don't know where I'm at, then I don't need to be in fear zone, because I'm unknown on where I'm even at. What if I'm not in the fear zone in reality? What if I'm so far below that this stuff doesn't affect me? Right? Or so far above that I have opportunity. I shouldn't naturally gravitate to fear. Right? Like my clients today, I was so proud of my clients. In the last 20, 24, 48 hours, I have clients that have invested collectively probably over 30 grand in gold and silver. Not toilet paper, gold and silver. Like, they actually went in and they looked at, okay, gold and silver just dropped. That's an asset class I want to own. It's on sale. I'm going to buy some. Meanwhile, the average American right now is panicking about frozen chicken and toilet paper and all this other stuff, right? So let's break down this chart, the scale of wealth that I'm going over. At the very bottom is poverty. Okay, I want to go ahead and point out everybody starts in poverty. When I was a baby, I was in poverty. I didn't have money earned because I had no time traded. If we zoom in on that, poverty, no money is earned because no time is traded. Okay, so what does that mean? That's people in the homeless shelter, not earning money, not trading time. They're in poverty. That's people sleeping on the street. That's people that are broke, right? They're below broke. They're in poverty. So I started there. You started there as a kid. All of us did, and we worked our way up. But if I started in poverty and I'm still in poverty today, Bill Gates even has a quote on that. If like, anyone can be born in poverty, but if you're staying there, it's totally the fault of the individual. Right? So anybody can be in poverty. The reality is that most of us do work up the scale, and those that are still in poverty today worked their way up a level and then walked back down. Right? So if I'm in poverty, I have to realize, and this is going to sound weird, but the next step for me is laziness. Who would agree laziness is better than poverty? If I'm doing no time and money, then minimal time, money being exchanged for time is better. That's an improvement. Right? But if someone's in poverty and I'm like, hey, let's get you a million, let's make you a millionaire and get passive income and all this stuff, that's not real to them. That can't help me. That's out reality entirely for me. I'm looking at, man, I'm sleeping in a homeless shelter right now, or I'm on the street right now, or, I'm squatting in someone's abandoned house right now. I've been actually in that position. I wasn't thinking about how do I make $1 million next month. And if someone told me they were going to help me do that, I wouldn't believe them. I was like, how do I get out of this situation? Right? Now, one unique thing I want to point out about poverty is no money being traded and no time being traded, no different than wealth, right? So the idea of like trading time for money is evil and I want to break that spell, you could do that just by becoming poverty. Like, you could go into poverty and just never trade time for money. But that's not really the ability we're looking for. We're looking for options and freedom. So I want to point out that those things are the same ability achieved, like the same, like, I'm not trading time for money, but the options that that person has and the opportunities that that person has are totally different. So I can either go up the scale and get free, or I can just quit and stay at the bottom, right? So that's poverty. Now, the next level up is laziness. Laziness being that I have minimal money earned because minimal time is being traded. Okay, who's ever worked a minimum wage job they hated? Not very high skill. I basically, walk up to a table and ask people what they want to eat and write it on a notepad and then give it to a cook and then bring the food out. That's not very high value time. So I'm not going to get very high value money in exchange for that. But if I exist there, my next step from laziness is insolvency. Okay, and it doesn't mean that I want to stay in either of those spots. The point is I want to move rapidly up these spots. But my point is that I'm not going to jump from laziness to middle class. I'm going to progress up. I have to, otherwise I'm skipping steps and I'm not actually going to get there, right? So I go from laziness to insolvency. What is insolvency? The money earned is a great deal less than the time traded, right? The money that I bring in is a great deal less than the time I'm trading. We've all been in that spot at some point where we're earning a lot less than the time we're trading. Now, the insolvent person usually is a hard worker. I've been insolvent. I was putting in my hours. I was working. I was cracking the whip. I was making it happen. And I wasn't earning very much. I was being underpaid, right? But the problem here is that a lot of times I would stay there. I would stay there because, again, I didn't know my next step. I didn't know my next step. Now, once I knew my next step is poser, right? I'm insolvent, but I really want the car and I really want the watch and I really want the this and I really want the that. And the poser phase, actually, you don't need to spend much time there at all. Like, I recommend you move through that rapidly, but I've been there, like buying, you know, the fake suit, the fake watch, the fake whatever, because I wanted to be something I wasn't, but my money earned wasn't there, right? We've all been broke and then bought stuff that made us look like we weren't. That's poser, right? Now, poser, that's better than insolvent. That's better than lazy. That's better than poverty, but it's not where I want to stay and camp out. If I'm a poser, then my next step is broke. I need to go from poser to broke. Broke means money earned is slightly less than time traded, right? Like, it's a smidge, not enough. It's enough for me to be looking at it all the time and realizing I don't make enough money. I'm not a poser anymore. I'm probably skimping and I'm paycheck to paycheck and I'm penny pinching, but I'm broke. Nonetheless, I'm broke, right? So I move from broke to stressed. Stressed is this condition where my money earned is my time traded. I've been stressed before. Who else has been stressed where if I didn't work, I didn't have money coming in? There was no lag. It was instantaneous. The money that I was making was because of the time I just traded. And if I stopped, I was going to be in trouble. That's stressed, right? Stressed is better than broke. My next step up from stressed is middle class. Now, here's the problem. Most people think middle class is the top of the scale. They get there and they never leave. Okay, I see entire like social justice and welfare campaigns about getting people from poverty into the middle class. That's not helpful. Yes, it is, like, in a small sense, yes, that's better, but people shouldn't stay in the middle class. Guys, the middle class, and I want to make sure you understand that where I'm coming from in this, the middle class is about to get hammered. All of this stuff going on with the market and politics and the virus, that's all going to push the middle class out of the comfort zone they're in. And I'm not saying like you're doomed. I'm saying get to the next step. There needs to be this urgency of, I need to get to the next step, not go buy toilet paper. It's, man, I need to go find out, how do I make more money this week? How do I save more? How do I get rid of some debt so I can go from middle class to comfortable? Now, when I'm comfortable, I still don't have passive income. I've been comfortable before. Okay, when I'm comfortable, comfortable means that the money I earn slightly exceeds the time I trade, right? It means that when I work, I have a small surplus. Barely, like maybe I can save $100 or $200. I'm comfortable. I might even be able to save $500, right? But the money I'm earning slightly exceeds the time I'm trading. I'm not in abundance. I'm just better off than most people. I don't have passive income. I still have to trade my time for money. I just have more than the other guy does. That's comfortable. A lot of people stay there as well. Now, as we move up the scale, comfortable moves into well off. I might have some passive income. The money that I earn greatly exceeds the time I trade. Well off is a fun spot to be in, right? It's not the end all be all, but if I have some passive income, that's some freedom right there. And if the money that I earn greatly exceeds the time I'm trading, that's a big deal compared to where I was on the scale. Now, again, it's easy to get stuck there. It's easy for me to say, okay, I'm well off. Everyone else is down there. I'm good. But the problem is that I'm well off until I'm not. I'm well off until my 401k gets lopped in half, or the rental property that I have goes vacant, or whatever happens and my situation is no longer good. Now, the end goal is, again, wealthy. I get to the top of the scale, wealth. Passive income exceeds my expenses, my 40% savings rate, and my taxes. Now, wealthy puts me in a position where a job layoff isn't going to affect me. My bills get covered by passive income, right? If I needed to relocate because of a pandemic, I could, and I would still be able to pay all my bills, and I would still be able to continue investing. Wealthy puts me in a position that when things crash, I'm actually going out there looking for ways to invest and increase my opportunity. That's where I want to be at. So, but I can't just jump from broke to wealthy. I'm not going to just go from middle class to wealthy. I've got to work my way up through this scale. And I've been in this industry almost a decade now. And my problem was that nobody ever broke this down for me. It was binary. It was you're either wealthy or you're not, which to a degree is true. But the problem is if I'm not, how do I get there? What's my next step? And what about when something grabs my attention, like the coronavirus or the market or whatever it is, and I already don't know my next step, and then that wealthy thing becomes even more mythical to me, and I just give up on it because I don't know where to go. So again, like I've got to look at where am I at. Now, a big part of this is confronting. Okay, I believe confronting means to face without flinching, to look at something for what it is without pretending it's not that, right? So if I'm broke, I need to be like, dude, I'm freaking broke. The money that I earn is slightly less than the time I trade. Or if I'm middle class, I'm middle class right now. The money I earn barely exceeds what I trade in time, right? Or if I'm well off, hey, I've got some passive income. The money I earn greatly exceeds the time traded, but I'm not wealthy right now. It's these little lies we tell ourselves though. Like when I'm like, I'm well off, and then I try and justify why technically that could be wealthy and technically I should be satisfied and why I'm better off than the people in the other countries. Like that's what actually kills us. Economically speaking, like that's not a safe mindset to be in, right? So let's say that I'm in broke mode. Most people, by the way, they range from middle class down to probably insolvent. Okay, so we don't have a lot of people who are actually comfortable in this country. We don't have a lot of people that are actually well off, and we have even less people that are wealthy. We have a lot of middle class people. We have a lot of stressed out people. We have a lot of broke people. We have a lot of posers, and we have a lot of insolvency, right? These guys in the middle here, like middle class, stressed, broke, poser, insolvent, this is the group that watches the news and hears about how the guys at the top screw the guys at the bottom. Meanwhile, the guys in the middle watching the news are actually the ones getting punched in the gut. Really important to realize that. But what do I do? Let's say I am broke. What do I do to improve? So I'm going to go ahead and show you guys. This is called the triangle of income. Last week I covered a topic called triangle of wealth. This is the next phase of that. It's called triangle of income. So let's say I'm broke right now. And I'm like, how do I get from broke to my next step? Again, my next step, I'm going from broke right here to stressed. How do I go to that next level? Right? And I'm not going to stay there. I'm not saying stress is the destination. I'm saying you do need to go up that step. So I need to increase my income, right? I need to increase my income. This is not some sales magic genius whiz kid thing. This is literally, I need to go find a way to move my income up, right? If I can't move my income up, I'm not going to improve. Income accelerates wealth. Income makes wealth happen faster. If I earn more, I can save more. If I save more, I can invest more. If I can invest more, I can earn more. So it starts with earning. How do I do that? Well, earning starts with knowledge, right? It's again a triangle. So this triangle was knowledge, value, and then exchange, right? So if I don't have enough income, I have to, again, swallow some humble pie and realize that there's probably a lot of things I don't know. If I knew them, I'd have more money. And if I don't know them, there's probably a lot of value that I lack as a human being. Doesn't mean that I have less rights than anybody. It just means I have less knowledge, therefore I'm less valuable. Now, if I have less value, it means I'm also not exchanging enough. I don't give enough. I'm not pushing out to the community and helping. I'm focused on me. Buying my toilet paper, buying my frozen chicken, getting my coronavirus injections, all whatever else, like that's intra-focused. I'm not helping other people. I'm not valuable and I'm not exchanging. So if I'm broke or I'm stressed or wherever I'm at lower on that scale, the solution is first increase my income. That starts by me acquiring knowledge. Okay, that starts by me acquiring knowledge and then acquiring knowledge on things that actually could help people, right? How do I help people become more fit? How do I help people with their finances? How do I help people learn? How do I help people gain employment? How do I help people? It's like the things that are intrinsically valuable to teach to other human beings. I need to know that stuff. That stuff makes me valuable, right? So the triangle breaks down to the three components. To increase one's income, one must increase a corner of this triangle. If I want to increase my income, I need to start by increasing a corner of this triangle. By increasing a corner of the triangle, the other two will grow as well, growing my income. Right? So look at this, like the knowledge is really like probably the most aggressive. Like if I want to really grow my income fast, it's going to start with knowledge. I need to start studying like hardcore and learning, right? And then that like I said, makes me more valuable and then I can be in exchange. Let's say I did that backwards though. Let's say I want to grow my income. I need to go get an exchange with people. I could do that. And what I'm probably going to find out is as soon as I start exchanging and my income does go up, but I cap, then I need to go get more knowledge. And then when I get more knowledge, I'm more valuable. And then when I'm more valuable, I can exchange even more. And it just continues to compound, right? So if I'm trying to get from broke to stressed, trying to get from here to here, I would start with, what do I need to know? Like what's the need? What's wanted and needed in the marketplace right now? How do I go know about that? And I'd spend the time to research. What's helped me tremendously is the willingness to study, the willingness to learn, the willingness to look up words, the willingness that when I don't understand something, I actively and aggressively find out the answer, because I'm not okay with not knowing. For me, that's an ethical issue. For me to not know something and continue in that condition is against my own ethics for myself. So I'm looking at, if I don't know, for me, it was money. I didn't know money because I didn't have it. And if I had it, it means I knew something. And if I didn't have it, it means I didn't know something. So I looked at, what do I need to study? And I invested probably 40 to 60 hours a week immediately over the course of the last 8 years, 9 years now, more than that even today. And I figured out how money worked. Now I became valuable to others. I can share with them what I've learned and be in exchange with them. And now my income starts growing. Every single one of these steps requires me to work that income triangle, right? So if I'm at middle class and I'm like, how do I go from middle class to comfortable? First, I need to increase my income. It means I need to go get more knowledge. I need to become more valuable. I need to get more exchange going on with others, right? This is sales, by the way. Like, all of this simplifies and boils down to knowledge, value, exchange. It's not this tricky equation of like, man, like I've met people when I've been here before where it's like, man, I can't get my income up, and things aren't going well, and I can't pay my bills, and I can't save money, and I'm broke, and I can't make, and it's like, bro, go make more money. And if I'm like, how? Go get some knowledge, go get some value, and then go exchange with others, right? Now, that's like the generic, like you can push on that at any level to get from one spot to the next, and you're going to see results. And then you tie that back into what we talked about last week, which was the triangle of wealth. Now that I'm earning, I've got to then save, and then I've got to invest, which means I minimize consumer spending, which means I minimize panicking, which means I minimize vacations. It means that I put all that stuff off, because when something like this happens in the economy, my trip to Disney World last year won't help me. All the toilet paper I just bought is not going to help me, right? The sweet car I just got is not going to help me. Okay, so that's what I want to focus on here. Now, if we move into like more of a, I want to show you guys the blueprint, more of a strategic level of thinking. Like, what do we start doing from step to step? This is called the Wealth Dynamics Blueprint. Okay, and it starts like this. If I want to build wealth, if I want to start moving up this scale that I talked about, the first thing I need to do is I need to decide to become wealthy, right? If I haven't decided to become wealthy, I'm not going to make progress, right? Like I was talking to a guy down here in California today, and they're like, man, we have a huge homeless problem in LA, and it's just too warm and people can stay outside. And I told them, like, hey, it's not even that. We have a homeless problem in Anchorage. I live in Alaska. We have a gigantic homeless problem. And he was confused. He's like, well, why would people be homeless there? That's the worst place you could be homeless. And what I was trying to point out to him is because those people haven't decided not to be. They continue to make the decision to be homeless, therefore they continue to create on that decision. If I haven't decided to go from middle class on the scale to comfortable on the scale, I'm not going to. Because I'm still deciding middle class is okay. Or let's say I'm broke. If I haven't decided to go from broke to stressed, where I'm making significantly less to just making the same, then I'm not going to make that progress. So I'm going to decide, ultimately my goal is wealth. My goal is to have enough passive income coming in that it exceeds my expenses, my 40% savings rate, and my taxes. That's my firm decision. That's where it starts. Now, again, as soon as I've made the decision, it's make more money short term. That's back to the triangle of income now. Short term, it doesn't mean I need to start a business. A lot of people I see are like, hey, I need to get into a business. No, you need to go sell the crap in your garage. You need to go return the stuff you bought last week that you don't need. You need to go figure out, like, how do I make money today, not build a business? The business comes later, right? There's a quote that I learned growing up in business, and it's, you've got to stay in business long enough to build one. I've got to stay in business long enough to build one. So if I'm not making enough money today, my business in 5 years is not going to help, because that's how long a real business typically does take to build, statistically speaking. So I'm going to look at, what can I sell? Do I have furniture I don't need? Do I have stuff in my garage I don't need? Do I have, if you're in Alaska, a snow machine that I only ride 24 times a year and really I don't need, and I could rent it instead? I'm going to get rid of that stuff, right? That's step number 2. Now, as soon as I get rid of it, then I go into step number 3, which is gaining financial control. Gaining the ability to start, stop, and change my income, my expenses, my savings, my investments. That's how I start making real progress. Because if I make short-term money and I don't have financial control, then I spend it on tickets down to wherever on my vacation, and I'm back to square one. I don't actually have a product, and I'm not making any progress on wealth. So it goes from financial control to then getting good at saying no, right? So if I made that decision and I know that this is where I'm trying to be on the scale, this is where I'm trying to reside, I need to say no to anything that keeps me at my current level, drops me down to a lower level, or slows me down from getting there faster. Think about that. If I operate on that basis, if I go back to my wealth scale, right? My goal is wealthy. And let's say I'm stressed. I need to say no to anything that keeps me in stress, moves me down to broke, or increases the amount of time that it takes to go from stressed to middle class. That's a lot of stuff I've got to be willing to say no to, which goes back to step number 1. Did I really decide to become wealthy, or did I just watch a webinar and got pumped and now I'm saying that that's what I want? If I really made that decision, it's going to show up in what I say no to. And the no's are the things that protect my time and that protect my money, right? It also means my investments. I'm not going to say yes to a 401k. My goal is wealth. My goal is wealth. Why would I say yes to something that conflicts with that, right? Now, once I've done that, then I sustainably increase the income, meaning that I look for long-term growing, scaling of the income. So that's the business. That's the sales career. That's the thing that can get me leverage for a very long period of time to bump my income up, because that's what's going to scale me into this. Initially, I just got a small bump to get me out of nothing. I was in nowhere land, and then boom, I got the instant income, got it going, got momentum, got control, and I'm saying no to the things I don't need now, and now I sustainably am going to scale the income. Now, this is so critical, and when I'm doing step 5, I need to make sure that it doesn't derail me. Sustainably scaling the income means that I go deep with my income source, not wide. It means that I pick a thing and I go all the way into it and I push as hard as I can until I'm able to then expand that out into other things that are parallel, right? But it doesn't mean that I do digital marketing and financial services and I'm a real estate agent and I do this and I do just this thing. For me, it's financial services. I was a life insurance guy first. Boom, got that business down. What's the next business that I add to that? Not what's the other business I'm more interested in. So sustainably scaling the income is that next step. Once I've done this, I'm saving everything. Okay, I'm saving everything with the goal of saving 40% of my income. Here's the trick. I talked to a client the other day, young guy, just getting started with his business. He's been in for, I think he said 18, 24 months maybe. And he's like, hey, I can't save because I'm reinvesting everything back into my company. But I want to save, but I can't because I'm reinvesting everything back into my company. I want you to realize this: when you're in step 5 and you're working up to step 6, it doesn't take money to make money. It takes effort, it takes talent, it takes know-how. So I need to be pulling money out of the business and putting it into assets. That's where we have the sacred account to create the income necessity for me to go hustle and make the money back. The idea that I need to spend this much on marketing and buy all this equipment, like that's BS. You don't need that stuff. Run a minimalist business, like keep your expenses tight. If you're a salesperson, keep your expenses tight. If you're on salary, keep your expenses tight. Stay in economy while you bump your income up and you set everything aside until you can save 40% of your income. Okay, and the reason being is historically when I looked back, I saw this chart. When I looked back, the top 1% of wealth, I'm going to go ahead and show you this to you guys actually on Facebook. The top 1% of wealth historically have saved 40% of their income. Let me see if I can find this chart. And this actually really applies, here we go. It applies to where we're at today. Okay, so check this out. If you guys are on Instagram, let me flip you around here. So this is what we're looking at. So basically the top 1% of wealth are up here, right? This line up here. You can see they've saved about 40% of their income, and they've done that for about the last 100 years, right? So you can see that trend. This is the top 1% of wealth. Boom, 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 boom. This is the next top 10 to 1%. So we have the top 1%, the next 9% in the middle here. This is like the comfortable people, right? So they've got the same trend, but they're not saving 40%. Then we have the bottom 90%. This is everyone below comfortable. So if we go back to our scale, we had wealthy, we had comfortable, and then we had everyone else below that. This is the everyone else, right? So if you look, 1913, they're saving 40% of their income. Okay, 1923, 1929, it dips a little bit. 1930, look how big of a dip that is. What happened in 1930? The Great Depression started, right? You can see they didn't just dip to zero, they actually started borrowing money. Now, what you're going to see happen today as this market crashes is the same trend. The wealthy people have been stacking cash. Warren Buffett has $120-something billion set aside right now. He's following the 40% rule. The market's going to crash. He's probably going to go buy some gigantic company and he's going to take it over at a discount because he had cash. He had money saved, right? As soon as the depression's over, look what they do. They go right back up to 40. 1950s, we hit another recession. Boom, they're back down again. This is measuring savings rate. It's not income and wealth. It's saying they stopped saving money. The only reason they stopped saving money is because they started investing money, right? As soon as they were done, they go back up. Now in the 40s, the depression recovered. These guys up here, they're all like, ooh, it's party time, it's great. These guys are saving more money than they ever had, right? And then you see the 50s, boom, drops again. 60s back up, 70s, boom, drops again. We get into the 90s, right? Another recession happened. They dropped their savings rate. You know, tech bubble, mortgage crisis. Lately, they've been back up at the 40% range. And you're going to see 2020, 2021, they're going to go back down and stop saving because now they're going to go buy. So everyone that's like, go buy toilet paper, that's not going to help you. You need to be following this chart. This is the chart I'm following. Now you can look at these other groups, the top, 10 to 1%, right? The top 10 to 1%, they followed along for the most part, but you can see there's a distinct difference. In the 1950s, they thought they could relax. So you can see they still tried to keep their savings rate up instead of investing. And then their trend actually went opposite here, and they never recovered. Right? Versus these guys, they were disciplined. This is what this is, discipline. I want the cupcake and I know I shouldn't, and I choose not to eat it because I know it's not the right thing to do. That's just ethics and discipline, right? And then the bottom 90, again, this is everyone in middle class and lower. They tried to actually save their way out of the Great Depression. You see, before the Depression, they weren't saving. The Depression happens, and now they're like, oh crap, we better start saving money. It's already too late at that point. Like if you're just now like, oh, the market crashed, I need to reallocate my 401k. That's called being effect. If I'm doing that, I am the effect. I'm not cause, I'm not winning, I'm not responsible. I'm actually a financial victim at that time, okay? So these guys actually never recover. If you look at down here, after the tech bubble, their savings rate dropped, bounced up slightly, and they're still basically saving nothing. So guys, this is real stuff. When you see me talk about like 40% savings rate, sacred account, all this stuff, it's not Jerry's opinion. This is, I study the top 1% for a living, and this is what they do historically. Now we can argue with it and complain about it and whine about it and talk about how evil the politicians are, or I can just go copy what they do. Okay, I've not bought 1 ounce of toilet paper. Right now I'm in Los Angeles. I live in Anchorage, I'm in Los Angeles. The reason I'm in Los Angeles is because I'm working on myself. Okay, it's probably the hub for coronavirus. I've not seen a single person with coronavirus, right? Because I'm following the top 1%. This is what they do. They're not staying in and shutting in right now. They're looking at how do I go increase my income? How do I go win? So back to the blueprint. So I'm getting my 40% saved. As I'm doing that, I'm also working on my credit. Okay, I used to think credit didn't matter. I used to think that I could get by without working on credit because I thought I was a Dave Ramsey guy at the time. I thought credit was the devil and you never buy on credit. But the reality is I've got clients right now that I've helped get 0% interest credit cards, borrow against those and put into deals that are making 12%. That's an infinite rate of return and it cost them nothing because they had credit. We built their credit profile up to the point where they could do that. It's called credit banking. So I need to clean up my credit profile. My score, if my score is not 700, I have an issue. Like that should be the lowest my score ever goes, right? That's going to give me access to more lines. As I'm doing that, I'm also working on legal and tax protection. I should pay as little tax as possible as I'm doing this. That's money that I'm being robbed from to invest, or if I can get that money back, I can keep it, right? Now, as I move into tax protection, the next thing is asset protection. I'm protecting my assets through gold and silver bullion. I keep about 10% of my liquid net worth in gold and silver at all times. That's my number. The reason being is that's insurance against currency devaluation, meaning when the government prints money like they are right now to bail out the stock market, it devalues our currency. The US dollar goes down in value and buys less things, which means we have more inflation. And the reason that they have inflation is so that we have to work harder for the same money, and they're going to offset that by increasing taxes. So I know the dollar is going down in value. I know it's going to be worthless someday. Why wouldn't I insure myself against it? So I'm looking at that first. Then I get into investing. Finally, I get into investing. And I'm investing at this point on step 10 in real cash flowing assets. I'm not doing Bitcoin. I'm not buying low in the stock market. Okay, I'm not speculating. I'm looking for what will not lose money that I understand that will pay me cash flow, that will grow my assets. And the goal is to then get into the category of being a millionaire and being wealthy and actually building this thing out so that I can have passive income exceeding my 40% savings rate in taxes. Okay, that's the strategy here. That's what I preach to my clients. It's not about max my 401k out and retire when I'm 60. You know, if I'm doing that, then like 60 might never come. Like part of my story and the reason I'm so urgent with this is my own mom died at 60 of cancer. I was her financial advisor. The very age that I told her, hey, you can retire, she died. So this entire story of like, you know, work hard, you know, go to school, get good grades, get a good job, work hard, put money in the 401k, pay off the mortgage, get good insurance, and then when you're 60, you can retire. Boom. Nuclear explosion right in front of me. The very thing I was teaching every single person in my life to do, I watched it not happen with my own mother. That's my story, and that's why I'm so urgent with this stuff, guys. Like, I don't want you to wait till you're 60. Okay, the market crashed like this month. I'm not 60. And the problem is if I wait till I'm 60, I'm never going to gain that money back. It's going to continue to go up and down and crash over and over and over. I've got to look at who are the actual wealthy people, right? I was talking to a client the other day here in Los Angeles. We met up for coffee. And what I pointed out to him in the conversation is that Wall Street, like the people that really make the money on Wall Street, they don't own stocks. They own companies that sell stocks to others. They own mutual funds. They own hedge funds. They solicit other people to buy the stocks. They don't want the stocks. They want the fees and the money that comes with it when me and you buy stocks from them. So I should be looking at it the same way. I don't want to own stuff in the market. I want to own a business. Right? It doesn't mean I need to go start a mutual fund, but my point is that these people that we're taking advice from, they're not doing the things they're telling us to do. Right? Now, really quick, let's take a pause and talk about the market. Okay, let's take a pause and talk about the market. We've all seen the market drop, right? And it's been down, I think the Dow Jones market is around 29, 30,000. That's down around 22 or 23,000. This all happened in the last 2 weeks. Everyone's paying attention to it. Meanwhile, the market's actually been down for about a month, actually. You look at it, like the charts of full month, no one was talking about it prior to that, but they are now. So how does a market crash? It's not magic, right? It doesn't just suddenly go down. What happens is enough people sold that the supply increased and the demand went down and prices dropped. The people, think about who probably owns the majority shareholders, like in these large companies in like the S&P 500 and the Dow Jones. The executives do, right? The owners, the CEOs, the board members, the financial institutions. These are the people that sold. Right? So think about, like, just logically process this. This should disturb you the way it disturbs me. We inflate the market. Let's just take Jeff Bezos, for example. We inflate the market, meaning that we pump a bunch of fake money into it, like the government's been doing, to drive up share prices. Meanwhile, these companies, the Amazons, the Apples, they're borrowing debt to buy shares of their own stock because the interest rate on that debt is cheaper than the returns they have to pay to their investors. So they're buying their own stock, further inflating the value of the company, right? Boom, 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 boom. It bumps it up, right? And we look at it, we're like, oh, the market's up. But suddenly, like, why would they inflate the stock if they didn't want the cash? Suddenly they sell. They take their profit. All of them sell. In January, I think it was over 200 CEOs left their company. You think they really kept their stock options, or you think they sold? I think they sold. That's one of the reasons the market tanked. Right? So all these big dogs sell. There's all of a sudden this just rush of supply. The demand goes down. The prices go down. I'm buying low because that's what Warren Buffett said. But think about, like, the money was not lost. It was transferred to the last person that sold. That should be a very significant impact. The Bezoses of the world inflate their own share prices and then sell the crap to me. They make the money that I lost. When my 401k dropped, I didn't lose the money. It went to them. It went to the financial institutions. It went to the billionaires. It went to all these people that they did this on purpose. There's no accident. Like if you watch, if you're into trading patterns, you can see the sell-offs. You can see when they happen, and you know that some whale in the market just went in and dumped all their shares, and they took advantage of a profit at everyone else's expense. Meanwhile, as retail investors, you and I are told, buy low, it's on sale. Why would I go buy low? I'm actually losing more money when I do that, right? So there's this different line of thinking that's got to happen. We can't continue operating on the same basis that got us here. I talked to a client today. I've been trying to get him to move his 401k probably for 4 to 6 weeks now. Didn't do it. Talks to one of my guys today. He's like, hey, Mike, I just lost $100,000. We should have done it a month ago. But the advice that he was getting was never sell your 401k. Keep it there. That's the normal thing. Lost 100 grand like that. Okay. Meanwhile, I have another client. He's probably 20 years old in New York. Like, he just sold all of his stocks about a month ago because I told him to. And he cashed out at a high. We moved it into a deal that's paying him a 12% interest rate for the next 5 years. He's ecstatic. He lost no money and he never will again. Right? So the level of thinking has to change. I've got to look at, where am I at on this scale? And like, I want to make sure you don't have this communication come across the wrong way. If I am not wealthy, then the information I have is not right. I can't be emotionally attached to the way that I operate. I shouldn't be defending myself. I shouldn't be justifying where I'm at. I shouldn't be arguing with people in the comments. If I'm not wealthy, I suck at money. That's the bottom line. And there's something I don't know about it, and I need to get more knowledge. There's nothing to defend there. I'm just not where I need to be at. I need to get to the next step. And the reason I say that, and it's kind of blunt, and I've been there. So I'm not pointing the finger. I've been there. I was the guy that had to realize, like, man, I'm an idiot. And I'm acting like I'm not, and I'm fighting with other people about it, even though I don't have stats and results. Then I realized, oh, I don't have results. It means that I don't have knowledge. I need to stop acting like I know what I'm talking about, and I need to go find somebody that does and learn from them, right? So that's where things are at. Now, on this note, I'm gonna wrap up and take some questions on this topic, because again, it comes down to, again, this triangle of income. So let's go back to the triangle. Knowledge. Where do I get that? Colleges are not going to teach us what we need to know about finances. If they did, our country wouldn't be where it's at today, right? Financial advisors are not going to teach us about what we need on finances, because if they did, and it truly was valid information, we wouldn't be where we're at today as a country, right? So the places that we go for knowledge, we have to question those too. right? There's this big movement on online right now, like selling and monetizing knowledge, taking your mess and turning it into a message. Like, get your knowledge from people that are actually winning. That's all I can say, right? That's where I get my knowledge from. I read about John Rockefeller. I read about Andrew Carnegie. I read about JP Morgan. I read about all these guys that have built wealth, and that's all I do. I just do what they do. Okay, I don't turn my mess into a message. Like, if I have a mess, I probably don't need to be sharing it with you, otherwise you'll get infected with what I have. But that's the bottom line, is that the knowledge is out there. And that's really the point of these courses. As I wrap up here, guys, the reason why I do these courses is the knowledge doesn't have to cost you $10,000 at a weekend mastermind with the bros, right? It's literally like everything I taught you tonight, you probably could have Googled for free. So why should I charge to teach you? I'll charge you to help you, because then I'm actually adding value. Again, knowledge, value, exchange. Knowledge leads to value, leads to exchange. So if I'm watching this today and I'm like, all right, I've been watching Jerry, what do I need to do next? Or this may be my first time, I'm a little bit skeptical. Both answers are go get more knowledge. Go study more. If the information I shared with you tonight changed your mindset or your viewpoint, or it caused you to have more stimulation on like, man, maybe there is different information out there, go get more knowledge, go do the resources, right? And don't go to college to do that. Don't go to a financial advisor to do that. Don't watch freaking YouTube videos put out by the public broadcasting system on finances to do that. Those are not wealthy people. Go read, the best answer I can give you, go read a biography about an old, dead wealthy guy. Somebody that actually made it, and all the way to the end, they kept their wealth, and then they had somebody write about it. Go read that. That's going to give you the best info, or you can keep tuning into these courses. Okay. So guys, that's what I have for you tonight. I do want to go ahead and open this up to any questions that we have. I think we have a couple in the comments here. In the chat, we have Vanessa says, that's a strong why. Thank you, Vanessa. That's my passion, the reason why I do this. It doesn't get much more powerful than that. Let me see if we have any comments in Facebook. Brad Reese says, I like how you explain income and wealth triangles. It's easy to understand and use. That's perfect. Chris, thanks for being in here, Chris. I appreciate you, my man. Chris knows what I was talking about tonight. Let's see if we have anything on Instagram. Maria says, I'm beautiful. Thank you, Maria. I appreciate that. Mean Show says, oi. Great. Let's see if we have anything else here in comments. If you guys do have any comments, go ahead and drop those down in the comments, questions and stuff. I'll go ahead and take a couple minutes to answer these. Luis says, hey, I'm Brazilian. That's awesome, Luis. One of my employees is Brazilian. Let's see here. Not seeing anything else on Instagram. Hashimoto says, I love you. Too soon, man. Too soon. We haven't established a relationship yet, Hashimoto. Awesome. So guys, I think that's all the questions I have. Let me see if there's anything else here on Facebook. I think we're good to go though. Perfect. So I think that's it, guys. So we'll go ahead and wrap up here. Thank you so much for tuning in and watching. The one thing I ask of you, if this shared you, or sorry, if this helped you, I want you to share it. Jerry Cannon says, I love the visuals. Thank you, Jerry. We've been working on those here while we've been in LA. If this helped you, share it. Okay, this is not going to be something that costs people money to watch. This is information they need. They have to have it. And if they don't, I appreciate it, Sergeant Lamb. Thank you. If they don't have it, like, no one's going to give it to them, or they're going to have to pay thousands of dollars to hear what's on this live stream. So share it, share it, share it. I appreciate that. Also, if you're a client of ours or you've been watching us for a while and we've impacted your finances, go to our Google page, leave me a review there. We're trying to get to 100. I think we're at 98 reviews. If you Google Wealth Dynamics, you'll see us there. And we'll just continue going with the content, guys. Thank you so much for watching. I appreciate you. I love you all. Stay out of the coronavirus craziness. And I want to just say one thing, guys. I'm in Los Angeles, right? I've not seen a single person with coronavirus. Not only that, I don't know a single person who has had coronavirus, and I don't know a single person who knows a single person who had coronavirus. So Like, take all the panic with a grain of salt. If you can't see it with your own eyes, it's probably not there. That's my rule of thumb. Doesn't mean you have to believe that way, but that's what I think too. So guys, that's what I have for you tonight. Thank you for watching. Sergeant Liam says, have you been to a hospital lately? I haven't been to a hospital in probably a decade. Those are sick factories. I stay out of them. Guys, that's all I have for you tonight. Thank you for watching. Like, share, subscribe. I'll talk to y'all soon.